Xenophobic attacks in South Africa just wiped 1.7 trillion naira off MTN Nigeria's market value in days. South Africa has been experiencing a wave of xenophobic sentiments and attacks targeting foreign nationals and foreign-owned businesses. MTN Group, which is headquartered in Johannesburg, South Africa, became a focal point of public anger in Nigeria due to its South African ownership. Calls began circulating on Nigerian social media for Nigerians to boycott MTN and for the federal government to take retaliatory action against MTN for what was happening to Nigerians in South Africa. And the stock market reacted immediately. Now, MTN had peaked at 830 naira per share before the xenophobia sentiment hit. Within days, MTN lost 10% or 1.7 trillion naira in market value as investors exited their positions amid market sentiments. The share price fell drastically amid calls for boycott, retaliatory measures that was circulating on social media. On one particularly brutal Monday session, MTN Nigeria hit the maximum negative 10% downside simultaneously alongside Unilever and Len Africa, contributing to a single day's cumulative loss of 2.35 trillion across the entire stock market. By early July, MTNN was trading at 750 naira, well below its 52-week high of 915 naira. That is the raw impact of sentiment-driven selling on a fundamentally strong stock. Now, MTN Nigeria CEO Carl Toriola responded directly, and his statement basically said that MTN Nigeria is a Nigerian company through and through, stressing that the telecom giant belongs as much to Nigerians as it does to its global owners, investors. With over 11 million Nigerians indirectly owning stakes in the company through pension fund investments. Think about this carefully. If you have a pension fund in Nigeria, there is a very real chance that you already own MTN Nigerian shares indirectly. A boycott of MTNN does not only hurt our South African counterparts, it directly affects Nigerian investors, Nigerian pension holders, and Nigerian institutional funds as well. The MTN Group chairman also weighed in, blaming state failure rather than ordinary South Africans for the xenophobic violence, which, in my opinion, the company was trying very hard to separate itself from the political narrative of the whole scenario. Now, there's something I need you to understand as an investor. Sentiment-driven sell-offs are totally different from fundamental-driven sell-offs of a particular stock. When a stock falls because its earnings collapsed, its debt exploded, or its business model broke, that is a fundamental problem. When a stock falls because of public anger, social media outrage, or geopolitical sentiment, that is a different situation entirely. The investors who sold MTN at 747 naira due to panic, due to the public outrage, practically handed their shares to the investors who bought the dip and currently are recovering from those gains. Now, this is not me telling you to ignore geopolitical risks. This is a serious matter. Xenophobia is serious. It affects us all as Nigerians. It is real and it matters. But as an investor, this is me telling you this as an investor, your job is to separate noise from substance. Always ask yourself, has anything changed about this company's ability to generate revenue and profit? If the answer is no, then the sell-off that has been happening is probably an opportunity, not a warning. MTN Nigeria is one of the largest stocks on the NGX by market capitalization. Whatever happens to MTN moves the entire market. And that's why understanding why it moves and how to think about these movements is essential knowledge for every investor. So I hope this gave you some clarity. Share this with your investment circle and drop your questions below. And as always, follow me, like, share to anyone who fancies content that revolves around the Nigerian and the US stock market. And I'll be seeing you in the next video. Bye-bye.